Someone told you an LLC would save you taxes, and you believed them. Maybe it was a YouTube video, maybe it was your buddy who just started a business. Maybe it was even your accountant. Here's the problem. They were wrong. And right now, today, that mistake could be costing you anywhere from $5,000 to $30,000 a year in taxes you never had to pay. I'm going to prove it to you in the next 12 minutes. I've been a tax attorney for over 30 years. I've reviewed thousands of tax returns, and I want to tell you about a pattern I see constantly. Someone forms an LLC, they feel smart, they feel protected, they tell their friends they're a business owner now. And then tax season hits, and they owe the exact same amount they owed before, sometimes more. And they call me confused. They say, "Toby, I thought the LLC was supposed to fix this," and I have to deliver the news. The LLC didn't fix anything because the LLC was never the strategy. It was just step one, and nobody told them what step two was. I'm Toby Mathis. I'm a tax attorney, and I run one of the largest tax and asset protection firms in the country. We work with thousands of real estate investors, business owners, and entrepreneurs every single year. And I'm telling you, the LLC myth is the most expensive misunderstanding in the entire small business world. So let's fix it. Right now, for free. Part 1. What an LLC actually is. First, let's get clear on what an LLC actually is. An LLC, a limited liability company, is a legal structure. It exists under state law. That's it. By itself, it has almost nothing to do with your federal taxes. Here's exactly what happens when most people form an LLC and do nothing else. The IRS looks at it and says, "Single-member LLC? We're gonna ignore that for tax purposes." Ignore it. That means your LLC income flows straight through onto your personal tax return. Schedule C, just like before. You are being taxed exactly the same way you were taxed before you spend $500 forming that LLC. So what did the LLC actually give you? Liability protection, potentially. A business bank account, sure. The feeling of being official, absolutely. Part 2. Where the real money is being lost. Now, here's where it gets really expensive. Most small business owners, and I mean the vast majority of the people watching this right now, are paying self-employment tax on every dollar they make. That's 15.3%. Social Security, Medicare, both sides. Because when you work for yourself, you pay the employee side and the employer side. On $100,000 of profit, that's $15,300 just in self-employment tax, before we even touch federal income tax, before state taxes. And your LLC, the one that was supposed to save you money, is doing absolutely nothing to reduce that number. Now, here's the part that makes me want to flip a table. There is a way to dramatically reduce that self-employment tax. It's been in the tax code for decades. It's completely legal. The IRS knows about it, and it works. But it requires a separate tax election that most people never make because nobody told them they had to. Part 3. The move nobody tells you. Here's what actually works. When you form your LLC, you have a choice. You can leave it as what's called a disregarded entity. That's the default. That's what most people do. That's the one that saves you $0. Or you can make a tax election to have your LLC treated as an S-corporation for federal tax purposes. Now, I know you're thinking, "Toby, that sounds complicated and scary." It's a one-page form, Form 2553. You file it with the IRS. Done. So what does that actually do for you? Here's the magic. When your LLC is taxed as an S-Corp, you split your income into two buckets. Bucket 1, your reasonable salary. That salary is subject to payroll taxes, yes. But here's the key word, reasonable. Not all of your profit, just your salary. Bucket 2, the rest of your profit comes out as a distribution, and distributions from an S-Corp not subject to self-employment tax. Let me show you the math because this is where people's jaws drop. Let's say your business makes $150,000 profit. Default LLC, disregarded entity. Self-employment tax on $150,000. That's roughly $21,200. Gone. LLC taxed as an S-Corp. You pay yourself a reasonable salary of, say, $70,000. Payroll taxes on $70,000 equals roughly $9,900. Remaining $80,000 comes out as a distribution. Zero self-employment tax on that $80,000. You just saved over $11,000 in one move, one form that most business owners have never filed. Let me tell you about someone I'll call Marcus. Marcus ran a successful home renovation business, made good money, about $180,000 in profit a year. Smart guy, hardworking, filed his taxes on time every year. He came to us because his accountant had retired and he needed someone new. When we pulled up his last 3 years of tax returns, I want you to picture this. He had been operating as a single-member LLC, default status, disregarded entity, for 6 years. 6 years! We ran the numbers on what he had overpaid in self-employment taxes alone. Wait for this number, over $74,000. $74,000 that he did not have to pay, that he will never get back. He wasn't doing anything wrong, he was filing correctly. He just didn't know the next step existed. And that is exactly what I mean when I say the LLC lie isn't malicious. Nobody sat down and said, "Let me trick Marcus." It's just that everyone stops at step 1 and calls it a strategy. It is not a strategy. It is the beginning of a strategy. Now, I have to be honest with you here, because if I just told you everyone should make the S-Corp election, I'd be doing the same thing I'm criticizing. There are situations where this doesn't make sense. Number 1, if your profit is below roughly $40,000 to $50,000. The S-Corp election comes with costs, payroll processing, additional tax filings, sometimes an extra $1,000 to $2,000 a year in accounting fees. If your profit is low enough, those costs eat up the savings. It doesn't pencil out yet. Number 2, certain professional service businesses may face additional rules around what counts as a reasonable salary. The IRS watches these closely. Number 3, your state matters. Some states have extra fees or franchise taxes on S-Corps that can reduce or eliminate the benefit. California, I'm looking at you. So the answer isn't blindly file Form 2553. The answer is understand what you have, run the numbers for your situation, and make the election when the math says yes. Here's what I want you to walk away with today. The LLC is not the villain here. LLCs are genuinely powerful tools: liability protection, credibility, structure. But an LLC with no tax election is like buying a gym membership and never going inside. You paid for the access, you just never used what it actually offers. The tax code in this country rewards people who understand the rules, not the people who work the hardest, not the people who make the most, the people who know the next step. And now, you do. So here's what I want you to do right now. Go look at your business structure. Are you a single-member LLC with no S-Corp election? If yes, you need to have that conversation. Drop in the comments, "I am a default LLC," and tell me how long you've been operating that way. I read every single comment and I want to see how many people this video just woke up. If you know a business owner, a friend, a spouse, a sibling who formed an LLC and thinks they've handled their taxes, send them this video. You might just save them $10,000. And if you want to go deeper, we run a free tax and asset protection workshop every week. Real strategies, real attorneys. No pitch, just the information you actually need. I'm Toby Mathis. Subscribe if you want to keep more of what you make. God bless.